This is a very different crisis because the economy is different, and especially the financial markets are different. This crisis had its origin in the housing bubble, which got out of hand, but it was exacerbated by the fact that there had been enormous innovation in financial markets. The securitization of mortgages, wrapping them up into packages and selling them to other investors, and didn't stop there. There were very fancy derivatives. The packages of mortgages were divided into different risk levels. It was all very fancy and complicated, and when the housing market came down, when prices began falling in housing, then this whole superstructure unraveled, and financial institutions and some individuals, but financial institutions all over the world were left holding products that was whose value was very uncertain, although the one thing you knew was it was less than it used to be. I think that the Treasury Secretary, who is a deal maker, that's what he does, he came from Goldman Sachs, thought that he was putting out an initial offer that he would have to negotiate with the Congress, and of course that's exactly what happened. The Congress was quite outraged. I don't think they saw it as an initial offer. They saw it as he wants a blank check. And so they, quite properly in my opinion, began to raise questions. What are the controls on this? How is the Treasury Secretary going to be held accountable, and to whom? Those are perfectly good questions, and the mechanism for accountability has to be worked out. They were asking whether the companies and the firms and financial institutions that benefited from this were going to simply get the benefits while the taxpayer took the losses. I think they will work on a way that the taxpayer can share in the ultimate gains if there are any, if the plan works and the markets stabilize and housing prices come back up again eventually. If the current negotiations between the executive and the Congress come to a conclusion, a big rescue package is put forward and it works, then I think the next president will still be facing an economy in recession, maybe not as bad a recession as we would have had without the rescue package, but still slow growth and job loss for quite a number of months. That will preoccupy a new administration. They will have to think about, what do we do about this? How do we mitigate it? Do we need another stimulus package? What kind? And unfortunately, this may preoccupy policymakers so much that the bigger, longer range issues will be put off. Many of us expected that the first thing that would be tackled would be health care. They will get to health care. It is a genuine national crisis, but it may take a little longer, and it may be done more incrementally than would otherwise have been. Then, of course, there is the unknown of the wars in Iraq and Afghanistan. Those will be a preoccupation. And then there's the question of the long-run health of the federal budget, dominated by Medicare and Medicaid and to some extent Social Security spending, which are rising very rapidly over the next 10 to 20 years. We need to have a plan for how to deal with that, and we need to deal with it quickly. And my fear is that these short-run crises are going to kick the bigger problem down the road, and we'll be sorry in the end.